So we are now recording, and good morning everyone, and welcome to the Earlypay Partnership Series, episode 1. So my name is Donelle Brooks and I'm the National Partnerships Manager with Earlypay, and I'm very excited today to be talking about all things ATO and who they're after next with the wonderful Olga Koskie from Tax Assure. Welcome, Olga.
Thanks, Donelle. How are you?
I'm marvellous, thank you. Just for our audience who possibly don't know who you are, just to start with, can you just give us a quick intro on you, your role at the business, and what Tax Assure are doing?
Yeah, absolutely. So I'm one of the owners and directors at Tax Assure, and what we do is extremely specialised, very niche, and we help people with tax debt. We help you get back into a position of compliance, and we help reduce the debt where possible. We don't do any what we would call front-end work. So we don't do any lodgements, we don't do any BAS, we don't do any bookkeeping, we don't do any tax advice, we don't lend. Like you guys, we just help in the debt space.
Perfect. So for everyone, we will be running through a series of questions today with Olga, but I highly encourage you to use the chat function to put any questions in that you have. We've really got 7 pretty punchy questions today, and then thought that we would have a fair bit of questions from our audience. So please don't be shy, pop them in the chat function. I will definitely get to them and open the floor up at the end. So Olga, I think we'll start first of all with the headline of what today's webinar was all about, which really is, we know that the ATO have been very strong in chasing debt over the last 6 to 8 months, and we only expect to ramp that up more. But we're hearing lots of clients sort of ask, well, I've got a pretty big debt and I haven't heard. Yeah. Who are the ATO after next? What do clients with debts expect to see next?
Yeah, absolutely. So what I will do though is just to start with and say we're not giving financial advice, and we can't give financial advice. A lot of what we're talking about today is what we're seeing, what we're hearing. Both myself and our debt team are talking to the ATO all day, every day. We speak to their debt team, and so that's where a lot of what we're saying and what we're seeing is coming from. Who is next and what is happening next is a really interesting question, because I get asked all the time, oh, I've got one client with a $2 million debt and they haven't got anything from the ATO. And then I've got another client with a $200,000 debt and they've got quite a serious warning letter. The most important thing I think to realise is if you have any outstanding debt that's not in a payment arrangement, then you're considered non-compliant. And the ATO don't have a specific rule as to who's next, who they're going after. If you are in a non-compliant position, which means you have a debt that's not in a payment plan and hasn't been paid, then you're at risk of further action. If it's a debt that's owed by a company, then you're at risk of personal liability, as well as the company being in the gun and further action being taken against the company. So the biggest thing, and I suppose the most important message, if we can today, is that there is help. And there are so many different people with different specialties, whether it's us, whether it's you guys, whether it's different people working in partnership together, that can solve the problem. Because if it's not paid and your head is in the sand and you're ignoring it, then you're at risk.
Absolutely. And so I guess from that, what you're saying is there's no threshold. So they're not sort of, you know, there's no targeted market to go after big debt or small debt. It's just if you're not compliant, you are going to be on their hit list and you need to get ready. And as you said, we often find that a lot of great businesses end up in tax debt because they keep piling all the money back into the business, thinking that it'll be right, I'll fix that when it comes to tax time. So I think that's really important to note, is that, you know, if you're not in a compliant arrangement, then get in one and, you know, we've got brokers who typically are often business owners. We've got some clients on here today as well. So, you know, definitely that's the first big tip for today. If you are currently not compliant, then get compliant really quickly.
And it is, sorry, I'll just mention, it is scary talking to the ATO. We do a lot of work, surprisingly, with doctors, and I was speaking to a neurosurgeon and he was completely freaked out, and his debt was about 150,000. So it's completely manageable. But for everyday normal people that don't talk to the ATO every day, it is super scary. And we understand that. So even if you don't want to deal with it, there is like a shield in between you and the ATO, and we can have that conversation for you. So it doesn't have to be as scary.
Absolutely. I think the wait times on hold trying to get into the ATO can be pretty interesting too. I'm sure that people in your team, Olga, have probably got a special number that gets you through a little bit quickly. And that's why, honestly, for anyone that's on here today, it really is important if you're in this situation to seek out the assistance of professionals to help you get through this time, because it is something that you can tackle and it is something that you can move through. You did mention when you were talking about that, Olga, about director liability. Just talk to us a little bit about that, what directors can expect. You know, we often hear, oh, you know, can the ATO take my house? Just talk to us a little bit about director liability and what they can actually, the ATO can come after.
Yeah, sure. So again, I'll sort of talk high level around how that generally works. But there are different portions of your tax, which include superannuation, PAYG, and now GST is also included. And that sort of snuck through during all the COVID regimes, that directors can become personally liable for those portions of a company's tax debt. There's a few technicalities and a few rules around when and how, but what can then happen is if the company is non-compliant, which means not necessarily paid in full, but no active arrangement, then the ATO can issue what's called a director penalty notice. And I'm sure lots of people have seen a lot of those being issued. There's been huge campaigns around this by the ATO. And when a director penalty notice is issued, it's making a director personally liable for the GST, PAYG, and super components of the company's tax debt. Now, if that is ignored forever, and if that is followed all the way down the line, and they don't respond to the director penalty notice, and the ATO continue to issue court proceedings, and then they follow through and get judgment, then at the end of all of that process, they could come after a director's home. But again, to stop that, there are ways to become compliant that include plans that are tailored to meet cash flow, not necessarily what sometimes the scary ATO is saying you have to do if the right negotiations and right discussions are entered into.
Absolutely. And I think that's really important to know where you sit. And again, it's one of those, and you said it yourself, it's a head in the sand type situation, right? So the longer you bury your head in the sand, then the harder it is to actually negotiate debt or negotiate an arrangement or stop those proceedings. Sometimes once they're that far down the line, we know that it can actually be pretty difficult to stop them as well, right?
Yeah, absolutely. And what happens too is just because the ATO haven't sent you a letter or haven't been knocking on the door or haven't been ringing you, doesn't mean that behind the scenes things are happening in the debt area. So I think during COVID, there was a lot of sense of false security almost that's carried over that, oh, I'm okay because I haven't got a letter, or I'm okay because I haven't got a phone call. But behind the scenes, your risk rating goes up within the ATO, and the ATO actually records whether there has been what they call active engagement. So if you haven't contacted the ATO to tell them that things haven't quite gone right or haven't gone bad, that's considered a black mark in some respects because there's been no active engagement with the ATO. So you've got your head in the sand. Behind the scenes, things are getting worse and they're actually escalating without you knowing that.
Wow. Okay, that's pretty interesting. And, you know, to think that if you haven't heard that nothing's happening, you know, again, it can be an issue of being extremely busy in your business, or it can just be, again, that thing of being a little bit naive and thinking that they won't come for you. So again, this is all manageable. This is all solvable by using, you know, experts like Olga and her team to be able to help you negotiate an arrangement and a debt. Olga, if I can just ask you a little bit around when negotiating debt, what should company directors or liable people in the business sort of be taking into consideration? What things may they need to sort of prove to the ATO, or what evidence may they need to have on hand?
So when we talk about negotiating with the ATO, it's different to negotiating with a commercial creditor. So the way the ATO work is they've got what's called legal practice requirements. And if you can't sleep, they're all on their website if you ever are bored and want to read them. And so what it does is it goes through what they're allowed to take into consideration and what they're not. So there's this big long list of things that they can take into consideration. And it's not just that Bob Smith's a really great guy and he's just had a hard time. So they're very specific factors that can be taken into consideration both when looking at a payment arrangement and also looking at getting rid of interest and penalties, which is a great way of reducing the debt. And so those factors need to be effectively put forward as a submission. And people say to me, well, can you just tell the ATO, if I owe them 300 grand, I'll pay them 100, and can they wipe off the rest? Doesn't work like that. It's not like a general commercial debtor. So it has to be effectively a submission that match what they're allowed to take into consideration. And then when the two come together, you'll get a sustainable payment plan. And also in great circumstances, getting rid of the interest and penalties. One of the things that we're finding at the moment, we're seeing a lot of very large debt. So the average debt we're seeing is actually double what it used to be. So an average debt that we would see would sort of be around 150, 300,000. We're seeing a lot of debt around the 800,000, 900,000 at the moment. And one of the biggest things that the ATO are looking at is business viability and ongoing viability when they're looking at payment plans. So not necessarily just, here's a little bit of cash now, but how is the business going to stay alive moving forward?
Absolutely. And we deal with that quite a bit in our business, obviously, when you're looking at the ICA and the ITA. And so being able to prove that viability, that not only can you afford to pay the debt, but you can continue to pay what's due and payable and coming in the future. And I think that's the thing that we often forget about when we go to negotiate tax debt. And having been a business owner myself, is that there really is that push and focus on that ability to, yes, be able to pay consistently the debt that's owed, but then also being able to pay what's due and payable on time. And I think we forget about that, right?
And they will take into consideration. So when I talk about these submissions, big factors are, so say if for example, Earlypay becomes engaged by a client, then that immediately helps with the business viability, because that shows there's going to be regular ongoing income coming in that will assist the business. Again, in some instances, if brokers are looking at borrowing or an injection of cash to cover off some certain payments, they're all things that the ATO will also take into consideration and are really helpful.
Perfect. And I think one of the things that we could probably just touch on here briefly is around that financing of clients and really making sure that it's the right option to solve the tax debt problem. We know that sometimes putting hardcore debt straight back onto a balance sheet is actually going to continue to hamstring their cash flow, because now they're liable for weekly, fortnightly, monthly payments on a pretty big chunk of money. So again, that negotiation of maybe, you know, a pretty hefty upfront and then an ongoing payment, that's still quite acceptable by the ATO. Is there any percentages that you know, or there's a guideline around that?
So we won't usually offer an upfront. So the ATO standard line is they want 20%, but a lot of what we do is no upfront because it doesn't assist businesses. Exactly what you said, that actually makes things worse. So if they've got to go and borrow the 20%, you're robbing Peter to pay Paul in some respects. And the ATO aren't silly. So especially when you're dealing with significant debt, they're taking those payments into account. So they know that if you've borrowed it somewhere else, you're going to have to pay that back as well. But a big part of our negotiations and our work is to not put extra stress on a business. There is no point getting them into a payment plan that they can't afford or that puts that stress on them. So our payment plans are not cookie cutter. I don't just look at a debt and go, okay, I'll divide it by 6 months and that's what you have to pay. Same with upfronts. It's just, it's not viable. There's no point doing that at all.
Absolutely. And I think that's so important for business owners and for our brokers on there dealing with, you know, your commercial clients every day. You know, a failed arrangement is likely to have a lot quicker action than what we've seen in our experience. A failed arrangement has a lot quicker action and is a lot harder to undo from the ATO versus a payment plan that is consistent, where you continue to make the payments and, as you said, is not placing more burden on the business.
And you know,
no, you're right. We've done that with invoice finance, right? Because we know that it's B2B, it's earned income, it's purely just accelerating the cash that they've already earned in the business. And that's why I think a lot of us, not just Earlypay, but a lot of lenders in our space can assist with ATO debt because the business is viable and it is strong. It's just made some poor choices around their ATO debt.
And they just need time. A lot of businesses, we need we see need breathing space, and they need the breathing space, they need the time, and they need the support from a whole heap of different people. I often say we work in parallel. I talk about lanes. So like, for example, the accountant will be lodging all of the compliance and getting them up to date. Earlypay will be doing the funding and looking at cash flow and ways to help with that. And then we'll be in our lane and getting them into an arrangement that matches that cash flow, matches what's coming in after all the compliance work has been done. The other thing I was also going to say is behind the scenes, following on from what you were saying, that if there's a failed arrangement, it makes things difficult. It also makes things difficult when sometimes we hear people say, oh, I'm just going to ring them and ask them to write off the debt. That's considered a failed application to get rid of interest and penalties. And so the more of those that are done on the file make it harder as well. So it is important to try and get it right the first time.
Absolutely. Now, the penalties word just came out again then, and we spoke a little bit about penalty notices on directors and what that can mean. I'm interested in just a little bit of a guideline. You know, we always hear lots of conversation about, oh, you know, the interest rate's cheaper at the ATO, and how do the interest and penalties sort of work? What's the structure, or where can people go to find that information?
Sure. So I think it's an old misconception before that there were all these alternatives. I think potentially maybe when there were only the 4 majors and that was it. You'd hear people say, oh, well, the ATO is a cheap small business bank. I don't agree with that at all. So at the moment, the ATO's interest rate sits at about 10% compounded daily. Now, all these brokers can do numbers quicker than me when it comes to interest rates, but I reckon probably the majority of the people on this call are sitting there going, hang on, we can lend much better than that. So what happens is when you have a debt, there are periods of time in which the ATO has different interest rates, and there's a table on their website. So for the period that the interest rate was at, say, 8, from the 1st of March, I'm making these up because I don't know them off my head, but say for all of 2002, pretend, for that period when you had the debt, it was at 8%. So each period of debt has a different interest rate, compounded daily, and it just keeps going. And so often we see the interest and penalties, especially over debt that's been lumpy for a long time. So you might pay a bit, not pay a bit, pay a bit over a period of time. The interest can be more than half the amount of the debt. So it's huge.
And I guess that's reflective of the size of the debt too, right? The bigger the debt, the bigger percentage of interest and penalties that go on. And that's when you see that. That's quite fascinating. I can't say yet in my experience, excuse me, that I've seen a business with more than 50% in interest, but I've certainly heard about it. So we often see the ATO campaigns out and about, you know, they're posting on LinkedIn, or we see it in the AFR, or, you know, sort of in major publications. Can you talk to us about what campaigns the ATO are running at the moment?
Yeah, so last year there was a big campaign with DPNs, sending out the DPNs. And that was, we sort of called it, and there was a lot of talk about what's called a one-touch campaign. So they would ring once if the company is not in a compliant arrangement. If no one answered the phone, a computer would automatically send a director penalty notice out. And so that's why when we were talking about earlier, who's in the gun, who's next? Well, it was whoever was non-compliant, a computer would send a director penalty notice. Now, a computer can't read notes. We're not quite there yet. And so people would say to me, no, but I've been talking to the ATO, or my accountant's been talking to the ATO, it's all okay. And I would say, I'm really worried because this is what I'm seeing. I'm concerned that there'll be a director penalty notice. And sure enough, we'd get a call 2 days later. Oh my God, you're right. I've now got a notice. How did this happen? I was talking to someone. So that was one of the ones. Another one that we were seeing at the start of this year was a direct dial campaign. And so again, there's been a huge recruitment of ATO grads. So you've got a lot of new people, a lot less. When you have older knowledge, I shouldn't call us old, but when you have older knowledge, you can use discretion and you can do different things. When you've got a lot of newbies on the phones, they would be calling companies immediately, even when there's been correspondence, even when there's been discussion, basically giving them 2 days to pay their debts. So there's a lot happening and a big push to get the recovery and get money back in.
Wow, That's pretty interesting, and I guess we'll wait and see what else comes as we get closer to tax time. I know when we spoke about this late last year and sort of bringing this webinar to fruition for the first one to kick off the year, you know, we spoke about sort of that preparation, and you get into December and, you know, it's Christmas time and everyone's away and you're ready to lodge your BAS, and then it's, you know, what are probably a couple of things that you can, we've got quite a lot of questions in the chat, so I'm going to be wary of moving on to those pretty quickly. But what are, I guess, you know, from Olga's perspective, what are the things that as clients, business owners, for your clients, as brokers, as business owners as well, when they're looking at, you know, negotiating payment plans or they're trying to help their client with that, obviously apart from engaging with a professional, what are 2 or 3 things that you think are really important that they should be taking into consideration when they start talking to the ATO?
So I actually think that's the first step. So I think so many people don't talk to the ATO. They truly think by them getting on the front foot that they're poking the bear, and by them getting on the front foot that it's going to make things worse. So my absolute top tip is engagement. Talk to the ATO, get on the front foot, do it before you've got the notice. And there's BASs coming up this month. So if you can't pay that, or it's going to put a huge cash flow imposition on your business, don't wait for the red notice, which is one of the scary notices that the ATO is saying. Do something about it now. And deal with it now and take that pressure away. There's also people that are in payment plans that thought that last year would go differently than it has, or even the start of this year would go differently. If you are in a payment plan that's putting more pressure on your cash flow that you can't afford, they can also be renegotiated. So don't drown under that and not be able to pay your ongoings. There's things that can be done about those arrangements.
Okay.
And then the third thing is with what we were talking about, the interest and penalties. With the right application, we can get rid of those now, not when the debt's fully paid. So often the ATO standard line is you have to wait for core debt to be paid before you can get rid of the interest and penalties. But we can, as I said, with the right information and the right application, we can get rid of that at the beginning. Now that does a couple of things. It obviously reduces the debt, so it reduces your payments. It reduces the interest upon interest. And a huge factor that no one ever talks about, and I really think we should, is the stress. So even when I'm a business owner, right? We all lie awake when we've got bills or we've got BAS or things are happening. Now, if the debt is less, you are going to feel better. It's just a fact of life. So I think that's a huge part of it as well, is how, or we joke that my hashtag now is help sleep at night. But it's really true, because if we can manage the debt and reduce the debt, it will make you feel better, which I think really needs to be taken into consideration in business.
Absolutely. And I think what I love about this is the first webinar where we've got through the whole thing without dropping the C word, being COVID. But to talk about stress, you know, a lot of business owners have been through that really difficult time of COVID and lockdowns. Then it's staffing, you know, when we're back, finding the right staff, getting their business manned for the right amount of hours. And so the stress really has been consistent for a lot of business owners now for, you know, a 3-year period. And I almost feel like this year of 2023 is like the year to breathe, engage in professionals that can help in your business, you know, engage your brokers that we've got on here today that can help find them the right finance solution, engage with professionals to help negotiate their debt, talk to a business advisor, you know, get ready for growth if that's what they're ready for. But I think there is a time just to take that brief pause and recognise that the last 3 years have been pretty tough. And now it's the aftermath of COVID that everyone is dealing with. So, you know, I think you're right. Don't bury your head in the sand. Rally around your mates that are business owners as well. We see that all the time. You know, lots of new businesses are opening now. You know, support them, support local, but certainly, you know, take the time, because you know that if you've got something in place, that you're right. And I'll have to start using your hashtag sleep better at night too, because you're right. The more you can reduce the stress on your mind, then the better you sleep, and that makes it a lot easier to tackle the next day.
I also think for the brokers that are watching this, there's actually a huge potential. if you embrace businesses with tax debt, there's a whole market that opens up. You guys are happy to deal with people with tax debt. We deal with people with tax debt. There's lenders out there that deal with people with tax debt. Instead of going, okay, that client has tax debt, too hard, not doing it, there's huge opportunities to actually help those clients and those businesses using the right people that are surrounding the brokers.
Absolutely. And for us, we get a lot of joy out of that, where we can help business owners who, have a bit of tax debt, have a real issue with, with growth as well. And so struggling to grow because of, tax debt, for instance. And there is nothing better than seeing those customers turn around over a period of time and end back in mainstream funding, and their business is succeeding, and we've been able to be there to support them through that. So, and again, you've done that, worked quite well with a couple of our bigger clients in Melbourne for that exact scenario. Yeah. So you're right. Support business owners, brokers see the potential, don't shy away. We definitely see lots of people, we know banks don't like tax debt, but there are plenty of other lenders out there who do and really do understand a small business owner. And that's the sort of lender that you should be looking for when you are trying to get funds to re-establish or to help pay some tax debt, for instance. That's when you really need to be working with a lender who's there to provide the solution, not a stopgap.
And tax debt doesn't always mean a bad business. Bad things happen, and we see that all the time. Hard things happen where people need time, which is what we're giving them, and they still have a viable business. They've just had a tough time.
Absolutely. So I'm going to go to the chat. So everyone else that's been holding on to your questions, please start firing them through now. But one of the questions we've got here, Olga, is what happens if you can't get onto a payment plan, but you're making payments monthly to try and smash down the debt? Are you still considered as being non-compliant?
Yeah, so if you asked me that sort of 2 years ago, it would be a different answer. And then it would have stopped further action, but now you're still considered non-compliant. So it makes negotiating an arrangement easier because you're showing voluntary payments. However, if you've got an outstanding debt and you're not in an agreed compliant plan, then you're considered in a non-compliant position and you're open to any of those recovery actions.
And what are some of the reasons that you may know of that clients may not be able to get on a plan? Is it simply that they're just not offering to pay an amount that the ATO are happy with? Do you know why payment plans are knocked back?
I think there's a myriad of reasons. They have to meet the legal practice requirements. Sure. So they have to meet those factors. So just by a plan that says I'm going to give you $10 a month, the $10 might be okay if it's supported by all of those other factors. So it's not always just the amount, it's how the application has been put together.
Excellent. And as you said before about that viability of the business too. Yeah. Another one we've got here is, does the ATO report or may report to credit reporting bodies for undue debts of businesses if they are severe?
Yeah, so they've just that new law came in last year as well, where they can now report businesses that have more than 100,000 in debt and more than 90 days overdue can be reported to a credit reporting agency, and we've seen that.
Perfect. Which application form do the company need to fill in to get rid of the interest rate?
There's no application form. There's no easy secret way. The way we do them are written submissions. They're normally 10 to 15 pages long of written submissions that are tailored to each client, each submission, that include the legal practice requirements depending on what's going on. So sorry, there's no quick form.
No quick form. Wouldn't that be nice?
And I know. Just tick the box.
Please wait. And I think that's really important too. And again, we're super grateful, and I think our attendees on here will be. But grabbing that half an hour free session is a great time to be able to talk to Olga or someone in her team about some of these things. And you may find that it's you're right at the right time of your business to engage the services of someone like Olga and her team to be able to get this on track, because there is nothing worse than tax debt, because it is the big ATO. It does scare a lot of people. People are concerned that they may lose their house. So I think it's really important that, you know, if one, and it's okay to say it, if you haven't got time in your business, as much as this is very, very important, but if you don't have time in your business, if you're not confident to have those conversations, it is again a prime time to grab hold of a professional, engage their services and set that plan into action, which will only create more solid building blocks for the business.
And the debt won't go away. It won't disappear. No matter how long you ignore it for, we're even helping people where their relatives have passed. So there is so many instances that it's not going to disappear overnight.
Yeah. Can you, this is an interesting one. I'm assuming the answer is no, but I'd love to know.
Oh dear.
Can you ask for the interest charged by the ATO to be refunded?
So in instances where the interest is more than the core debt, so we've done this. So we helped, it was actually a security guard company, and they had lumpy compliance over about 8 years. So sometimes they were compliant, sometimes they weren't. We went back and had a look at what the interest component was for that full 8 years. They owed the ATO about $80,000, and they had paid over the life of this non-compliance $90,000. So what we were able to do is we got the full $90,000, what's called remitted, and they got a refund back because it was more than what they owed the ATO.
Okay, excellent. So that's definitely something to keep in mind. And again,
not easy. Yep.
No, but don't let it keep going. Years and years and years makes it a lot of a lot harder, a lot more engagement, a lot more time from you as well to negotiate and try and fix something that's old.
Yeah, the longer it is, the older it is, the harder it is.
Yeah, perfect. We've got lots of people asking for your details, so that's good. So we'll make sure we share those after. Great question from Courtney. Are you seeing a rise in small business restructuring plans? And is this something that you do or get involved in?
Okay, so again, insolvency professionals are the better ones to talk to about this. Small business restructure has a whole heap of limitations. One of them is that the debt needs to be under $1 million. Now, it depends on the business, and that might sound like a huge number, but a lot of businesses, their debts aren't under $1 million. The other fun fact is your super and employee entitlements must be up to date to qualify for a small business restructure. And most businesses that are in tax debt problems or that are considering small business restructure don't have super up to date and don't have employee entitlements up to date. And the third factor that has to be considered is that if you're, the most common example is in the building industry, but if you have got covenants or guarantees or contracts with anyone that an event of insolvency or an act of insolvency affects those contracts and affects those covenants, even a small business restructure is considered an event of insolvency. So that might void contracts you have with builders, and it has a huge amount of ramifications behind the scenes. We don't get involved with them. As I said, we're very specialised. We just deal with the tax debt. But we hear a lot about it, we see a lot about it. We do sometimes, if a client would suit a client rather than they just need more time, then that is an option that we would refer to a partner that does that sort of work. But I don't think that they're the magic wand that a lot of people feel they were.
Perfect. And another great question, which is you may answer this, send me an email or take it offline, but it's just about your engagement, how engaging with tax assurer is structured and charged. So that's been asked a couple of ways.
Yeah, I'm happy to go through that. So I sort of chunk it down into 3 separate parts. So what we do when we initially, after we've had a discussion with either a broker, a client or a referrer, is we do an initial review. That review doesn't cost anything, where we go through, it's a bit like a deep dive, and we have a look at things like we were talking about, the risk rating, what's going on with the client, where they sit within the ATO's debt department, how much the debt is, how much the interest and penalties are. And that tells me how much work is going to be involved to get them back into a compliant position. So we do that so we know what we're getting ourselves into, and so the clients know. The second part of the work is a upfront fixed fee to get you into a payment plan and to do the application so you're compliant. But very transparent, not time-based. You know what that is upfront. And then the third component is a success fee to get rid of the interest and penalties. So we only charge once we've got rid of the interest and penalties on the success fee basis.
Fabulous. That's great. I think we've got, oh yeah, would love to contact Olga in the future. Fantastic. And look, for any of you that are on today that are in the Port Macquarie area, one of the other directors in the Tax Assured business, Michael Moon, will be attending a face-to-face regional roadshow that we're running in Port Macquarie on the 28th of February. So if anyone would like to, you know, get some more information and meet Michael face-to-face, then reach out to me and let me know, and we can certainly organise a ticket for you. Thanks, Peter. We just got some great feedback on there, Olga, about, you know, when they've someone who's dealt with us and our BDMs around ATO debt, and that we really do try and understand a business, and we really do want to try and help. And so it definitely, you know, reach out to our BDMs, because, yeah, we will always connect clients to other businesses or other partners or professionals that they need to be able to solve a problem. So, a quick question, this is good. One of our brokers wants to know if they would be able to use their 30-minute session for a client.
Yeah, absolutely.
Like to put forward.
That's sort of actually what I envisaged, that most brokers would want to use them to talk about clients. So yeah, absolutely.
Excellent. No, and we will definitely be sending a transcript through of this meeting to everyone that attended today. So you will get a copy of that. That's on there too. Olga, what are your top 3 tips for 2023?
Oh dear. I think book a holiday. Travel, get on an aeroplane. You're probably asking more for tax, right?
Absolutely. I think so, although I'm happy to hear both.
That's my top tip. I think get on the front foot is the absolutely engage before you're chased is the top tip. Use experts in their field is another thing that I'm very passionate about. I think it's impossible to be an expert at everything, whether it's law, whether it's lending, whether it's broking, whether it's tax debt. I think we are specialists in our field and have spent so much time learning our field that using experts is the way to go. And for me, I think the third one too is I'm a very sort of honest and transparent, what you see is what you get. But I think even in business, if you are speaking honestly and with compassion and kindness to other people, that they'll get that back. So I think the whole, no, I'm fine, I don't have tax debt down the pub, for example, compared to, shit, it's been a hard couple of years and I'm struggling, if you actually have those conversations, you will find the right people to help. And you'll find the right support. And I think you'll get further in your business than the bravado of all ice cream and rainbows.
Absolutely. Olga Koskie, we have come to the end. The chat function has finally slowed down. Thank you so much for joining us. We will have you back again.
My pleasure.
And it'll be around that lovely time of year.
Yes.
But we won't get you in June. It's okay. We know how busy brokers and clients are at that time of year. But certainly when businesses are starting to get ready to lodge and understanding some more information that can be helpful, we will have you on again. For everyone that's been on here today and asked questions, thank you for your input and thank you for asking so many questions that have been really relevant. And there's been a lot of so true, that's great, I feel the same. So there's been a lot of the things that we've discussed today are obviously clearly on everyone's mind. So thank you for taking the time out to join the first of our partnership series. Olga, I'll definitely look after Michael in Port Macquarie for our face-to-face event. Olga Koskie from Tax Assured, thank you so much for joining us today on the Earlypay Partnership series. See you, mate.
Bye.
Bye.